Alrighty, guys, what is going up? Welcome back to the podcast. We are live. We are going good. Today's episode, we're going to be talking about how to pretty much start investing in stocks. This is going to be a real beginner, step-by-step guide to really help beginners out there start investing, getting their feet wet, and trying to, make them not lose a ton of cash. Hold on, let me kind of fix my microphone here. It's kind of fell down a little bit. All right, so really, if you guys don't know who I am, my name is Carter Farr. I have roughly 3 years of full-time day trading experience. I've been doing it full-time. I've been doing, my podcast, YouTube, Carter Farr on YouTube, if you guys want to see more, educational videos on stocks or everything like that. Excuse me. But so we're going to be talking about, how to really just start investing in stocks and kind of breaking down my experience, some tips and tricks, everything like that. So the very first thing you guys need to do is pretty much decide how you want to invest in stocks. Now you might be saying, Carter, it's very simple. I just want to buy them. Well, there's two ways. You can do it the DIY type, and you can do everything yourself. You can choose your own stocks, choose the stock funds, choose everything. But if that's, say, you're a busy guy, you can hire people, stockbrokers, to do it for you. Now, you might be saying, well, Carter, that's not the best way to do it. They could be taking fees and everything like that. And that's true. But these people often have more experience and everything like that. But I do everything myself. The reason why I do it is because it's cheaper for me. I have roughly 3 years of experience for this, and I really have found some success. Now, it's pretty cool that I can do it by myself, but there are these things called robo-advisors. They're pretty much they're not robots, but they're online software that really you put in your criteria that you want to meet a certain stock, and the robo-advisor will pretty much buy and sell and do everything for you. Often these robo-advisors are a lot cheaper than actual real life brokers or real life wealth managers. For those of you that are out there and you're like, oh, Carter, I don't need to invest. I have a 401k. I have that all set up. What I want you to do is to go see how much you are paying per year for your account to be open. Now, you might be saying, Carter, I don't think they charge anything. But 80% of people don't realize that their 401k provider charges you maybe 1.5 to 2% per year. And if you think about that, 2% a year. So, all right. So inflation is anywhere from 2 to pretty much 2 to 3% per year, give or take. Some years it might go up, some years it might be down a little bit, but it's in that ballpark. Now you have this 401k provider that say charges you another 2%. So let's say we have the inflation rate at 2%. Let's say we have your 401k provider takes 2%. So you're already down 4%. Now you're going to have, if that's they just put everything in the general market, they put it all in, okay? The average general market gets 10%, all right? So just after that 4% that you lost, you're only going to be up 6% a year, and they're going to be taking so much money and so much advantage of you from that. I read a book. Where is it? It's a Tony Robbins book. I highly recommend it. I think it's Money Master the Game. I think that's the one. He talks about it, and it's a really interesting thing, guys. It's very interesting because he has all this experience and he knows a lot more people than I do in the financial industry. But he was saying that all these people are pretty much putting their money away and they're getting scammed out of it. They're getting scammed because all of these 401k providers are taking so much from from these hardworking people. And by the time they realize it, it's kind of too late. So if you guys have a 401k provider, I think the lowest interest or the lowest management fee you can get is a company named, what is it? I think it's America's Best 401k. I think it is that. Let me see if that's right. Because these, America's, I'm looking it up right now. Best 401k. Okay, fee checker. Let's see. Because I know that, yes, it's America's Best 401k. So you guys need to come on, at least check it out, or talk to maybe your boss or something about this. See if you guys can get it switched, because they can switch it. I'm pretty sure it's almost free to switch over. And if it will help you guys, yes, I'm pretty sure it is. All right, so research shows, this is what it says, that 44% of business owners haven't read their fee disclosure in the past year, and 70% of Americans think they pay no fees whatsoever. So really, guys, you need to check it out. You need to come on here, America's Best 401k. This is not an ad or anything like that, but it will really help you save some cash in the long run. It really will. Man, we kind of went off on a rant there, but what we were talking about, buying stocks. Okay, I just want you guys to know. I want you guys to be financially stable when you guys retire and not have to pay ridiculous fees. Really, that's the bottom line. All right, so let's get back to how you want to invest in stocks. So, like we said, there's two things you can do, like broker, or you can just do it yourself. I do it myself. It's very simple to do it yourself. I put pretty much, man, I forget how much it is. It's roughly around 50% of my income. I put roughly 50% of my income in the general S&P 500. Now, I know a lot of you might be saying, Carter, that's kind of ridiculous to do. And Carter, why would you do that? Well, I'm thinking long term. Right now, that money is a tool. And you can literally let it sit in a toolbox, let it rust, or you can keep it moving, keep it, making more stuff. You can make stuff with tools. So that's what I'm trying to do with it. You know what I mean? I'm not trying to let it sit, because there's so many people that just let their money sit in savings. And if you're going to let your money sit in savings, that's cool. Like, it's not a big deal, but look up Ally's, Ally Bank's high interest savings. It's around 2%. And it's better than nothing. So it pretty much matches the inflation rate, which is very cool. That's why I like it. It gives you something. So if you're putting money in, just your savings account, try putting it in the Ally Bank. But all right. So after you've pretty much, we keep talking about different things, guys, but I gotta keep going off. But all right. So after you pretty much determine whether you want to do it yourself or you want someone else to do it. If you have someone else do it, they're gonna do the rest of these steps for you. That's why a lot of people do it. It makes it simpler, but they do have fees and everything like that. But next thing is you're gonna be opening up a broker's account. You're gonna be opening up an account where you can buy and sell stock. Now, for those beginners out there, and you want to kind of start getting your feet wet, but you don't want to put in $1,000 or $2,000 into something, you want to get your feet wet. Well, here's what I would do. I would open up a Robinhood app and pretty much just start buying and selling from there. Because all these brokers that I'm going to be talking about here in a minute, they charge commissions, and they charge upwards of $6.95 to buy, and then another $6.95 to sell. So right there, you're already down, $14 or so, just shy of $14, and you're gonna have to make that up, or you're gonna lose money. So really, Robinhood is a low cost. There's no minimum account balance. There's no commission. So when you buy a stock, it's no commission. And when you sell a stock, it's no commission. Now, how they make money, because it's very simple, is they scalp your trades. A lot of people don't think that this is true, but it is. And what they do is if let's say you want to buy a stock for $1, okay, you click buy, you click market buy. So you click it. When the stock hits down, for 99 cents or 98 cents, so 2 cents, because you want to buy it at $1, 2 cents, they will purchase the stock for 98 cents, but give it to you for $1. Okay, so you're down 2 cents. In the long term, it's not a big deal because you want to buy that stock at that certain price, and there's nothing you can do. That's the bottom line. So if you want to start getting your feet wet, I would highly recommend that, and just start messing around with it. Put $5-10 in it and see where it can get you. A lot of stocks that are more stock market investing type, like blue chip stocks. Blue chip stocks are companies that you've heard of, companies that you see day to day. They're like, Amazon, they're Disney, Apple, everything like that. Those are the stocks, but those stocks are a lot more expensive. But putting just a low amount of money will help you get more familiar with the broker and help you kind of start getting your feet wet and how to use everything. All right, so after you figure out an account, okay, or if you don't use Robinhood, it's no big deal. There are a lot of low cost brokers. TD Ameritrade's a good one, but for the trader fee, it's $6.95. And if you have a certain account size with them, you can call them up and get it cheaper. Like mine's $2.95 with them, because that is my active trading platform. And so it's very simple. You just call them up and they will see your account balance and change it. There's Ali Invest, which is 4.9%, or not percent, 4.95 to buy and sell. I need to get a drink real quick, but just stay on. So much better. My throat was getting scratchy because I was getting going. But so Ali Invest charges $4.95 to buy and sell. It's a little cheaper than TD Ameritrade if you guys are below that minimum. And then Merrill Lynch has one, but it's $6.95. E-Trade's $6.95. So that's why I would recommend just doing the oh my gosh, I can't even talk, Robinhood app. So some robo-advisors here we'll talk about. They do charge a management fee. So this is Wealthfront charges 0.25%. So these are very low cost ones, but you have to have $5,000 with them. Betterment charges 2.5%, no minimum balance, and a free management with a qualifying deposit. So that's probably $5,000 or more. SoFi, SOFI, management fee 0, account minimum is $100. It has a free career counseling plus loan discounts with qualifying deposits. So pretty much everything you're going to be having to put, $5,000 to get any of these good discounts. All right, so next thing here is pretty much what stock do you want to buy? Do you want to buy individual stocks? Do you want to buy ETFs? Do you want to buy mutual funds? So what I want to do, like what I buy, guys, I buy stocks that are really I see potential in. I see something that they will do in the next 40 years, because that's when I plan on retiring. So if I'm just going to be buying long term, I'm going to be putting money in maybe some technology ETFs. I'm putting money in the S&P 500 or VOO. The ETF is VOO. It's VOO. Highly recommend to check that out. It's low cost, low risk, and you put your money in and you don't worry about it. Because there's been times where I put money in and I constantly keep checking my phone. I constantly keep checking everything because I'm worried it's going to fall. But that's not the case. So I would highly recommend looking up VOO. So those, or you can put money in mutual funds. I don't, because they charge fees, they charge everything, guys. I would put money in low cost index funds or ETFs. like VU, SPY. These are all the S&P. They're the S&P 500 trackers. So when the S&P 500 goes up, these go up with it. When it goes down with it. But all right, so one of the things I like about ETFs, guys, is most brokers, they don't charge you commission. So when I use Vanguard for all my long-term investing, just because it's reliable, they have good prices, good software, and everything like that. They charge $0 to buy, $0 to sell, and I don't have to worry about all that those commissions adding up over the long term because they're all ETFs, so I don't got to worry about it. All right, so if you're going to buy an individual stock here, guys, here's what I would recommend doing. Building a diversified portfolio, meaning buy some tech company, buy some cannabis company, buy some auto company, buy pretty much everything. Diversify, because if that's, say, one of these stocks goes up and the other goes down, it'll balance it out. Now, these companies are going to be offering dividends as well. Same with the ETFs. You get dividends with ETFs. I get dividend with VU, and BND is a bond that I own. So you'll get dividends with them. It's just a certain percentage that they give their investors for pretty much investing with them. If say they had a great year, they'll often give out some sort of dividend to everyone. All right, so the next thing here, it's start investing. You got to start now. If you keep waiting, what I found myself, when I turned 18, I always wanted to invest long term. Now, I found myself really trying to do it, but I often would just take money out of the account and not worry about it and say, I'll do it in a month. And that might be a good thing to do and everything like that, but realistically, you got to start young, and you got to start. So the famous Warren Buffett has famously said that low-cost S&P 500 index fund is the best investment most Americans can make for the long term. Because choosing individual stocks only if you believe in the company's potential for long-term growth. Very simple to what I was saying. Putting money in the S&P 500, best investment. You get dividends, low cost, low risk, and kind of a high reward. Now, if you kind of pick a stock can go up, 8% one day and down 8%. They're a lot more volatile and they're a little more risky. But if you play it smart and you do research and you do everything that you need to do, and if you just believe in it, you got a gut feeling, then go for it, guys. You never have any regrets, because if you're putting money in the S&P 500 and you want to have a more riskier side, yes, put money in stocks. Put money in individual stocks is what I meant to say. But yeah, so that's just the best way to kind of start investing, a step-by-step guide on how I would want to start and how I wish I would have started investing, guys. So that is it, though. I hope you guys enjoyed this episode, and if you did, drop a huge review on this and say if you liked it. And if you're listening to it on YouTube, we are 1 subscriber away from 1,000 subs. Massive giveaways coming up. I think we're going to be giving away an Xbox One, PlayStation 4, some books. I think maybe some like those Amazon Echoes. So subscribe to the channel. Remember to always stay happy, stay positive, and I really hope you guys do this and have a great, fantastic day. And you're listening to it on the drive to work or the drive home from work, because that's where a lot of my viewers listen. Drive safe, and I hope you guys really have a great day, and take care, guys.